very good evening to all of you. Okay, I'll ask the same question which was asked as the last question to the previous speaker. It's already 5 days. So what is your feel of the budget? Good? Yes. Mute response, but yes, some people say good. And I don't, nobody feels bad about the budget. Does anyone feel bad? Yeah. Yeah. Somewhere the memories of the past have not been very good. So शायद हम लोग सीख गए ये चीज को कि हर एक स्टेप जो गवर्नमेंट लेना चाहती है हम लोग एक स्केप्टिज्म से देखते हैं, हम लोग ये एक एंगल से देखते हैं शायद इसमें क्या इंडस्ट्री के लिए बेनिफिट है या नहीं है. So that is there, but as we most of us do believe, this is one budget where finance minister, according to me, has done a very wonderful job. I would not say a good job, I would say a wonderful job. He could have done more, and we can always expect more. But within the constraints which he had, at least the direction which he has taken appears to be on the positive side. So I believe that yes, there's always hope, and so long as there's hope, I think we can always try to look at the good things in the budget and try to take benefits of them. As far as indirect taxes is concerned, at a macro level, yes, few good things, a couple of bad things as well, and it's always a package. Any budget would always be a package of certain positive aspects, certain negative aspects, and of course certain unfinished agenda. So we'll try to cover some of those as we move into the discussion zone. Just to start with, the finance minister in his speech talked about 9 pillars on the basis of which he is looking at his tax proposals. This is the first time that we are seeing that a finance minister in his speech is bringing out the foundations on the basis of which his tax proposals are. I think that is very important step. These are all symbolic steps, but according to me, it's a very important step. Wherein before he really starts his tax proposals, he says that look, I am going to present so many things, but all those things will be based on some 9 broad principles. And some of them, yes, he has done lots of things over there. Some things in direct taxes, some things in indirect taxes. As far as indirect taxes is concerned, I think the last 3 of them are very interesting, and they do form a basis of what some of the proposals we are going to talk about. First is reducing litigation, the 7th one. The last 3 ones are important. Reducing litigation in indirect taxes. Just like in direct tax, we have an amnesty or a direct tax litigation scheme. In indirect tax also, over a period of time, we've just accumulated lots of litigation. And unlike direct tax, wherein there is a reasonable resolution within a few years, those who have faced indirect tax litigation either in excise, customs or service tax would know that it takes at least 10 years to any litigation to resolve. Now in that sense, perhaps there's an amnesty scheme or a dispute resolution scheme as we call it, which has been brought about under the indirect tax regime, which can be useful. Simplification and rationalization, here again there are some amendments in the separate credit rules which will help people who are into a mixed output, having excisable as well as non-excisable goods, or having taxable services and non-taxable services. We had a dreaded section called Rule 6.3, which has been sought to be replaced and made much more logical. We'll be going into that. And use of technology, we are slowly and steadily trying to use more and more technology to make people accountable, make even the department accountable. So these are the 3 important things which we will be talking about when we go to the specific budget proposals. So with that background, we can go to the next slide. This is a broad talk which we'll try to do over the next 35 to 40 minutes. We'll start with service tax because quite a few amendments there. From there we'll move to separate credit and then look at some specific sectors and try to understand the impact on those sectors. Look at some important changes in excise duty law as well. And then go to central sales tax and Maharashtra VAT to some extent. And finally look at what is the way forward as far as goods and services tax, GST, which is a landmark reform knocking over doors. When is it going to actually open up the doors? We try to understand what is happening on that front on a broad level. So this is what we'll try to do over the next 40 minutes or so. And of course, at any slide, if you have questions on that slide, please feel free to interrupt me and ask those questions. If there are generic questions, we can park them towards the end. But if I'm talking on a particular topic, and if there's a question on that, I would encourage you to ask the question at that moment itself so that it can become a little bit more interactive and not remain as dry as generally taxation is expected to be. So let's start with service tax. And when we talk about service tax, as a pre-build-up to the budget, there was a lot of fear that yes, last year we increased the rate from 12 to 14%. We are planning to introduce a goods and services tax. We always kept on feeling that services are taxed at a lower rate, whereas goods bear a high tax, both in terms of excise duty and VAT, and over and above that you have octroi duty and entry taxes and things like that. And therefore in GST we said that yes, we have to bring rates together. There was a lot of fear that this 14 might increase to 16. Luckily the finance minister has resisted any temptation to change that rate. So I think that is a big positive. He's kept the rate, basic service tax rate from 14, it has kept to 14 only. Last year only it had increased from 12 to 14. So he said let it settle down, let me not immediately increase it. Basic rate remains at 14. But along with that, now we brought in a cess, a new cess which is known as a Krishi Kalyan cess, which will be at the rate of 0.5% of the value of tax. Last Diwali we had brought a cess known as Swachha Bharat cess, SBC, which is 0.5%. And this is where I feel one negative part, or this is something which has disappointed me to some extent. At one hand we are saying we want to make life simple. If you want to make life simple, you want tax and keep it, no problems. You want to use it for farmers, use it, no problems. But do you really need to complicate it by having multiple tiers of taxation? Last year, after so many years, we said that no, education cess, secondary higher education cess, we don't want separate, we want to merge it in the basic rate. So we sort of got freedom from education cess, secondary higher education cess to some extent. Now this year, again we have two more gifts. One is in the form of Swachha Bharat cess, and the second one in the form of Krishi Kalyan cess. So we are getting a conflicting signals. We are at one hand trying to do away with the negatives of the past, and then bring some more negatives. So that's the complication. Luckily enough, the finance minister said, I will give you credit of the Krishi Kalyan cess, which has been charged. So if you are a service provider, on the input side there is a Krishi Kalyan cess, it can be used as credit, just like your service tax or excise duty can be claimed as credit, KKC also can be claimed as credit. Now, when Swachha Bharat cess was introduced in November, at that time they had clarified that Swachha Bharat cess is not available as a credit. Now, provisions are similar. That also is 0.5%, this is also 0.5%. And if you look at the language of Swachha Bharat cess and Krishi Kalyan cess is similar. But yet, for SBC, the government at that time clarified that credit is not available. And when KKC comes in, today the government says, I will give you credit. So either of these two clarifications is not correct. And we would believe that the first clarification saying SBC as credit not being available is incorrect. Of course, if you want to claim it, it will result in some litigation, but there is a good case to say that I should be entitled for the credit of the SBC paid on the input services. Because otherwise it goes against the principle of same and credit. And essentially all these cesses are actually in the nature of taxes on services. And if that be the case, we have a Karnataka. We have this next slide, please. Next one. Yeah, we have this Karnataka High Court decision in the context of sugar cess, because excise duty, all of us are aware, we kept on living with cesses of this time. And there generally the provisions have been interpreted by the courts to say that a cess is essentially an extension of an excise duty. Same way these SBC and KKC are also extensions of service tax, and therefore if service tax is available to you as credit, even these SBC and KKC should be available as credit. So that is as far as the credit on the cesses goes. One more issue, of course, which comes up in this cess story and the frequent changes in the tax rates is, we also have something known as a point of taxation rules, which define the rate whenever there is a change in the tax rate. Which tax rate should apply? Should we apply the old rate? Should we apply the new rate? There is some amendment over there which basically tries to say that if your invoice is raised prior to the cutoff date and you have received the money prior to the cutoff date, then only the cess will not be applicable. But if either your invoicing happens afterwards or your money is received afterwards, then the cess will be applicable. According to me, again, this is something which will have to be tested over a period of time. As of now, I don't think I will take too much of time on that aspect because it's too specific and too technical. It might apply only to some limited cases of transactions during this specific period of time. So that is as far as the Krishi Kalyan cess is concerned. All in all, yes, it's not going to be too complicated because credits are available. Had credits not been available, it would have resulted in a lot of cascading. But because of credit, life should be reasonably smooth. Let's go to the next one. This is an important change which again shows the mindset of the government to really improvise and accept that yes, I made a mistake. And this is, I think, a major change between the previous finance ministers and the current finance minister. The previous finance minister was known to be adamant to whatever he brought in. So there were taxes which were celebrated against him. The most classic example being the fringe benefit tax. It came with a personality, it went back with a personality. But here we have a situation, just a couple of years ago, the current finance minister increased the interest rate to 30% per annum under service tax. So it ranged from 1824 to 30%. Lots of people made representations saying this 30% interest rate is very high, it's obnoxious. Even money lenders don't charge 30% interest rate today. So if you are going to charge 30%, businesses will get wiped off. Finance minister understood this and he had the courage to actually roll back something which he only had done. So this is one positive side which I can see. The government is listening to various representations. Maybe not all of them may come in one budget. Maybe they come over a period of budgets, 2-3 budgets. But yes, this is one place where the interest rate, which currently ranges from 18 to 30% depending on the period of delay, has been brought down all the way to 15% per annum. Of course, in an indirect tax, there is always that concern that if you reduce interest rate too low, and your penalties are also not very high. The last couple of years, the penalties have been reduced drastically. People might use this as a funding opportunity. And I am sure people over here would understand what I mean by this funding opportunity. Market is bad, your money is stuck, you have your workers to pay for, you have your creditors to pay for. They will come and stand on your door. So always they will get priority over a statutory payment, perhaps. This has to be avoided. Government is not into the business of funding your tax, funding your business. So what they have said is, generally interest rate is 15%. But if you have collected service tax but not paid it to the government, then I can't give you this 15% rate. Then the rate will increase to 24% per annum. I think it's fair. So those are the two rates which we are going to talk about moving forward. So that's interest. Let's go to the next one. This is one pain area which the government has tried to bring in, not actually emanating out of this budget but out of the prior budget, but becoming effective from 1st of April 2016. Now this is a provision where government says any service given by the government will become taxable. I am happy, fine. Government, if it provides a service, they should pay service tax, collect the service tax and pay service tax like any other service provider or a consultant. The problem here is the government says, I cannot implement my own law, so I bring in what is known as reverse charge mechanism. So just like you make payments for transporters and you have to yourself pay service tax, it started with transporters, then went on to advocates, list kept on increasing, and now we also have, if you make any payment to the government as a business entity, you make any payment to the government for a service given by the government, you will be required to pay service tax yourself as a reverse charge mechanism. Now this can dilute the process drastically. I don't know what all are the nature of services rendered by the government. This can itself be a big debate whether government really renders services, because there's a saying which said, I do business not because of government, I do business in spite of government. So it's more a roadblock. Governments more act like roadblocks into your business rather than facilitators to your business. Be as it may, we have this entry now which says any services provided by the government to business entities will be a subject matter of reverse charge mechanism and service tax will be payable by the business entity. Please note, this applies to two important conditions. There should be a service and that service should be given by government. Now what is meant by government? There could be various questions which can come in. I'm sure lots of you must be having units in MIDC or GIDC or things like that. Right? Is GIDC, MIDC government?
State government.
State government? This is a common misconception. Friends, GIDC, MIDC is not government. It is a government autonomous body set up under an Industrial Development Act. So for that you don't have to worry about that. If you make payment to GIDC, MIDC, that does not get covered here. Let's take one more example. What happens to, let's say, a payment which you make to in the nature of a tax? Let's say you pay octroi. Is it a payment which you make to the government? Yeah. Yes. The octroi goes to the Bombay Municipal Corporation. But is it a service? It's a levy, it's a tax. A tax cannot be a service. So again, that would not get covered. Okay? So we have to ask two questions. Am I making a payment to the government? And then I also have to ask the question whether it is in the nature of a service or it's a nature of a tax or a levy. If it's in the nature of a tax or a levy, again reverse charge would not apply and you don't have to worry. Now that leaves me to a question that what all is covered. Very few items are covered, frankly. One example which the government has given this year is an example of telecom companies when they make payment of spectrum. Okay, so that's a service. The government is giving you a license to operate a spectrum of a 2G, 3G, 4G. All the licenses, radio wave frequencies are sold. So that is a service which the government says you have to pay reverse charge service tax. Same way, mining companies might pay royalties to the state government for obtaining a mining lease. Those types of payments, if your company is making, you need to be careful where you get some right against a payment which you make. Not an abstract payment like a tax, where you don't get any specific right against that payment. That is not a service. So if there are any payments in your company of those nature, you need to find them out and then discharge reverse charge service tax. Yes?
It will cover license fees?
Again, a license fee is not against a specific type of a service. Again, this is something which is being debated across. So let's say if you talk about a shop and establishment license. Now this is a payment which you make for the regulatory function of the government. The government is merely regulating the shops within the state. It is not for a preferential right. Whereas as compared to that, when you look at a spectrum, it's a preferential right. There are only 3 or 4 telecom companies. When you look at a mining right, you are actually using a government property. But a shop and establishment license which you get, you are not using a government property, it's your own property, it's your own business, but they want to regulate you and therefore they charge a license fee. So I would believe that it is not covered, but yes, there is a little bit of grayness in that. There are some consultants who believe that this types of anything which is not a tax or a duty is covered. I don't think that would be a correct way to look at it.
So if you pay lease to the government?
Lease would be covered, definitely. Now, for example, mining lease is the best example. It is clearly stated to be covered. And any other lease payments which you make to the government would get covered. Only thing is if the lease is of an immovable property, then for renting, the governments themselves have to pay the service tax. Okay. So, for example, if you've taken a property on lease from, let's say, the Ministry of Railways or from the Municipal Corporation of Bombay, then the Municipal Corporation of Bombay will itself charge you service tax. You don't need to pay yourself as a reverse charge.
What about land leases? The land we have got for GIDC and MIDC.
Yes. So for that there are two answers. If you look at land lease from GIDC, MIDC, firstly I already answered that GIDC, MIDC is not government. And secondly, when you look at land leases, it is related to renting of property. There, if applicable, those entities have to charge. You don't have to worry. For rents, you don't have to worry. But other payments, yes, there is a problem. Yeah. Let's go to the next one. Go to the next one. So that is as far as the government services are concerned. What I can also see is there are certain amendments on the procedural front. The first one being that now the Companies Act, you are permitted to float a one-person company. You can have a limited liability with one person. You did not have two shareholders for forming a company. Now necessarily this is one person, so it's like an individual. So here we are given a concession. We are told that for the service tax purposes, such companies, one-person companies will be treated as individuals and they will be required to file the taxes and pay the taxes on a quarterly basis. So that's a small concession which we have brought in. Second thing which we have brought in is we have brought in a concept of an annual return. Both under service tax as well as under excise, we are bringing in a concept of annual return. So you continue to file the two half-yearly returns, In excise also you continue to file your monthly returns. Over and above that, there will be one more return which will have to be filed by the 30th of November. Now somebody will ask, why is this extra return required? And I think this extra return, of course the format is not out. The purpose of this extra return would be to capture transaction level details through a technology, through an automation, so that there can be a real-time matching of the credits which you claim with the taxes paid by the supplier. So like for example in VAT today, you have a situation wherein your credits are matched with the supplier's payments, and then there's an automatic mismatch. In Maharashtra we have some concept known as J1, J2, and if there's a mismatch in that, you are not allowed the credit. Whereas as compared to that, when you go to Senvet credit under the excise and service tax laws, you just put a single number in your return, which is the credit for the month. There is no mechanism for the government to know how much of this is genuine credit, how much of this is inflated credit. All of this can happen at the time of excise audit. But at the time of filing of return, there is no automatic process to find that out. That is what they are trying to bring out through this annual return perhaps. So we'll have to wait for the annual return. We are told that we have to file it by the 30th November of the next year. We are permitted to revise the return if the original return is in time. If you have missed the bus in filing your original return, if you file it late, then you can't file the revised return. And of course, if you file it late, there are late filing fees which can range up to 20,000 rupees, which is there even today for the regular returns. Similar late filing fees is there for the annual return as well. Next one is a little bit of a relief. A couple of years back, we brought the power of arrest for the first time in the service tax law. Now, this power of arrest under the service tax law was given to the excise officers because it's administered by the excise department. And at a lot of places, we found that this was misused or threatened to be misused. And therefore, the government this year has said that I want to restrict the power to arrest only in a case where somebody has collected but not paid the tax. Any other thing, you believe it is taxable, the SSC believes it is not taxable, you keep on fighting. There cannot be arrest on that account. Any interpretation issue, no arrest. Only reason for arrest could be collected but not paid. And that too of an amount exceeding 2 crores. Then only there can be a power of arrest. And I think it's fair. Because if you are taking away the government money to the extent of 2 crores and above, naturally I think you don't deserve a lot of sympathy. So in that case the power of arrest is there, otherwise there is no power of arrest. We'll go to the next one. The Indirect Tax Dispute Resolution Scheme, a scheme which I was talking about at the start. What this scheme says is if there are any appeals which are pending before the Commissioner Appeals, you can apply under this scheme. You will have to pay the tax, you will have to pay the interest, and you will pay 25% penalty and your appeal will get concluded. Of course, you don't need to get emotionally attached because the issue will not be decided either in favor or against. So otherwise what happens most of the times is you are stuck with an appeal because you don't want to consider position. Let us say you are disallowed Senvet credit in a particular period. Now if you withdraw the appeal, you believe that okay, next year also there will be a problem because it's a continuing thing, next year also you will have similar Senvet credit. So the government says just because you apply in this scheme does not mean that for the next year you have accepted that position. You can change the position for the next year also. This will not be treated as a decision on merits. It will be just a conclusion of a process. That's all. So in that sense, it's good tax, interest, 25% penalty. Only important thing is that in service tax law, we already have a general concession where we are told that if the transaction is captured in your books of accounts, at any point of time you can move out by paying tax, interest and 50% penalty. Therefore, the additional benefit is low. The additional benefit is only 25% of the penalty. Unless you have a very weak case and you are on a sticky wicket, then it may make sense to go in this scheme. But if your tax itself is disputable, for whatever reason you believe that no, that you still have some good case to argue, then this scheme is not useful. Because then I would rather fight the matter out and take my chances and pay 25% pay 50% penalty if I lose ultimately. Okay. So in that sense, limited benefit, but yes, it's very much there. Senvet credit is one area where there are some major changes. Two important amendments. The definition of inputs and capital goods is amended to include goods which are used for pumping of water. So many a times, outside the factory premises, you might need a pump which will take out the water and take it to your factory unit. All of those types of goods which are used for pumping of water, maybe within the factory, outside the factory premises. Sometimes you have to carry the water all the way from a nearby river all the way up to your factory. all those equipments which are used for pumping this water from that location to your factory will all be a part of eligible SENVATable items, either as inputs or capital goods, depending on their classification. Second important thing which they have done is they have said that small value assets up to 10,000 rupees per piece will be classified as inputs and not as capital goods. And all of us here are into excise zone, so we are aware that under excise, SENVAT credit is available for goods either as inputs or as capital goods. In inputs, you get the credit in the first year itself. In capital goods, you have to claim the credit in two parts, 50% in the first year, 50% in the second year. So here, we are told that if there are small value assets up to 10,000, you can treat them as inputs and claim the credit in the first year itself. You don't need to take 50-50, half credit in first year, half credit in second year. So a small amendment, but what happens because of this is a lot of paperwork reduces. Today, for even a very small machine which you buy, maybe it's a very insignificant machine, because it is classified in chapter 84-85. The officer says, no, you can't treat it as inputs, you have to treat it as capital goods. You treat it as fixed assets in your books of accounts, then don't claim depreciation on the excise component. When the assessment happens, they say, show me the fixed asset, because capital goods, it's important to maintain a record of how they are being used. And then if you remove it from your factory and keep it outside for more than 180 days, then there's a procedure to be followed. All those paperwork and all those problems start. So to avoid all those problems, we are now told that up to 10,000, treat it as inputs, claim the credit and forget it. No, so long as you don't remove it as such, there's no problem about the questioning of the credit. So in that sense, it's a welcome move which has come in. Next one. This is again a change which has been brought in the situation where somebody is providing mixed output. You have certain items which are taxable, certain items which are non-excisable. If you are a manufacturer of a mixed output or you are a provider of a mixed output service, then we have something known as Rule 6, which said that for any exempted output, you have to pay 6 or 7% duty or an amount. Or what you can do is, if you have lots of those types of transactions, you can choose to go for what is known as a proportionate option. So every year, calculate the value of your taxable output and exempted output, calculate a ratio, and claim the credit based on that ratio. Now that had many small interpretation issues. We are now trying to sort out all those interpretation issues, and instead of that, keep a very simple scheme. What I'll do is I'll not take you through the old law because it's very specific and it may not have a lot of relevance. But let me just quickly explain you what is the current proposed law, which will be applicable from the 1st of April 2016. What we are told is, if you are having both taxable and exempted activities, then you take your total SENVAT credit, whatever is your RG23 balance, and slice that into 3 baskets. The first basket is credit related to exempted activity, maybe non-excisable goods, maybe nil rate of duty wala goods, and maybe your exempted services, including trading activity, which is now defined to be an exempted service. If you are into that zone, that will be a credit A, which will not be available at all. Then you have credit B, which is something which goes only in your non-taxable goods, non-exempted goods. So it can be something where you are paying excise duty, something where you are paying service tax on your output. In that case, you will get credit fully, and then whatever remains is your common credit. And for that common credit, you divide it in the ratio of your exempted output and taxable output. Claim the credit related to taxable output, don't claim the credit related to exempted output. So in a sense, it's a logical conclusion to this entire process, and I think it's a very good and a simplified measure or a move which we are trying to bring in this provision. Again, one more welcome change which we have brought in is that as far as 6 and 7% option is concerned, we are told, yes, if I don't choose this proportionate option, I'll pay 6-7%, but the amount to be paid under this option will not exceed the credit which I have taken. In the past, we've seen examples where for a very small exempted activity, people were called upon to pay a huge amount, and some reported cases are also there on this front, that I claimed a credit of 50,000 rupees and I was also into some exempted activity. Against the 50,000 rupees of credit claim, many times this 6-7% which has to be paid came to around 1 crore of rupees. And then there was a show cause person had to fight all the way to the tribunal and then get a relief. And the tribunal used to say that this person has taken 50,000. If he is ready to pay back 50,000, you can't expect him to pay 1 crore rupees on the exempted activity. So that has now been given a legal sanctity. We are now told that yes, this 6-7% calculation which you do of an amount for your non-excisable production cannot exceed the credit taken during that month. So a welcome step again, trying to reduce litigation and trying to reduce the problems on this front. Next one. Certain procedural changes. Provisions related to input service distributor are also rationalized. They will be made more simpler. Now, input service distributor, of course, is a concept. I'm not sure whether many of us use it, but in many cases it may be important. What this concept says is, if you have a head office wherein you obtain various input services and your factory is located elsewhere, then the credit of the service tax paid on these input services, you can push from the head office to the factory by registering your head office as an input service distributor. Now, all of this works very simply if you have only one factory. But if you have more than one factory and more than one excise registration, the question which comes is you have a common head office and you have to transfer the credit to various units. So how will you transfer it? So they have given a formula. They say based on the excisable turnover of each of the units, you will transfer the credits in that ratio. So in that there were certain issues attached to it, which they have tried to rationalize. I am not going into too much of detail of it, but that is a provision which is there. If you have multiple factories, then you can use that provision to take care of it. Say we go to the sectoral impact. Construction, I don't think, unless there's somebody who's interested in construction, I can deal with it. Because most of the sectors are very specific. Let's go to the next one. Yeah, this is one important change which has been brought in, which may impact you to some extent. All of us are aware legal services are the reverse charge. So if you pay to any firm of advocate or an advocate, as a business entity, you are required to pay service tax on the payment which you made to the advocate. Nothing has changed on that front. What happens many a times back end is, these advocates do not, as a partnership firm or an individual advocate, he will himself not do the work, he will also appoint a senior advocate on your behalf. If it's a large matter, he will appoint a senior advocate on your behalf. He will pay the senior advocate and again take the fees from you. Now, till now what was happening was, the transaction between the senior advocate and that firm of advocates was not taxable. It was outside the purview of service tax. Because ultimately your reverse charge was there, and the money which you pay includes the payment made to senior advocates. So it was anyways covered, somewhere the government was getting a tax. But this year, for some strange reason, the exemption to the senior advocate has been withdrawn. So what happens is, now the senior advocate will charge that law firm of advocates a service tax. The law firm of advocates is not expected to charge you, and therefore they will not get credit also. But naturally, if they don't get credit, from where will they recover the service tax? Let's say the senior advocate's bill is 10 lakhs and he is going to charge 1,50,000 as service tax and the sales. 11,50,000 he will recover from you, and you are again paying 1150. You are under reverse charge, so you will again have to pay service tax on 1150. So that becomes a double tax issue. What might happen at some point of time is, this law firms will then tell you that look, you pay me my fees separately. For the senior advocate, please directly cut a check in the name of the senior advocate. That might happen, and that realignment might happen. If that does not happen, then there is a double service tax which might come in on this front. Yeah, let's go ahead. Transportation, a couple of small changes again may impact you to some extent. Till today, shipping freight was outside the purview of service tax. International freight was totally outside. Air freight and shipping freight, both of them, if you import raw materials, export your finished goods, that was outside the purview of service tax. But now, shipping freight is brought into the purview of service tax for import cargo. So if you are importing some goods from a foreign country, maybe a raw material or something, then the shipping line, they were charging service tax only on the terminal handling charges and the loading charges. They were not charging service tax on the freight value. The price for the freight from the foreign country to the Indian country was not a part of service tax. Now that becomes a part of service tax. It might have an impact on your costing. More important than costing, most of you will say it's a raw material, so I'll claim a credit if I am a manufacturer. Problem in credits will come because the shipping line may not have a direct relationship with you. Most of the times the shipping line will raise an invoice on a freight forwarder or an aggregator, and the aggregator will raise an invoice on you. Now most of the aggregators may not be in a position to take a call that yes, I will charge you service tax and I will claim credit. So it will all depend on how the freight forwarding industry aligns to this amendment, because most freight forwarders already have notices demanding service tax on the profit difference. And many of them have profits, some of them want to be transparent to you, some of them don't want to be transparent and keep their margins loaded in that process. So that's where, while credit may be available, how is it going to operationalize at the ground level, whether you get supporting documents for that, is a concern which you need to address and talk to your respective freight forwarder and try to find a solution to this entire issue. Of course, export freight is not going to be taxable, so that's the good thing part of it. Yeah. So next one. Only one aspect over here which you need to notice: if you are dealing with an Indian shipping line or an Indian forwarder, life is simple. He will charge you the service tax, and you have to then worry about the credit. But if you are directly dealing with a foreign shipping line for whatever reason, and you make a foreign remittance of a shipping freight, then you will have to pay service tax as import of service. So that is one more aspect which you just need to bear in mind. Goods transport, again not a major change. Rail transportation, the rate is increased from 30 to 40% if it's done by a person other than the Indian Railways. Otherwise, I think more or less things are same. Coastal transportation also, the tax rate remains the same. Only thing is they are given credits now, so maybe you can bargain for a lower price if you are having any coastal transportation activity. Software, we are now told that it will be either excise or service tax. Both the places they are separate notifications giving exemption for service tax if you paid excise, exemption from excise if you paid service tax. And this is one important concern which we are now seeing coming out day in and day out. Again, coming back to the earlier example of import freight. As you all know, import freight is a part of customs valuation. So when you import some product, you have to pay customs duty on the CIF value, including the freight, and there's a notional formula also whereby you have to add the freight. So you are already paying custom duty on it, and the customs includes the CVD component. So you have paid excise duty, and the earlier slide you understood that yes, there's a service tax on it. So till now, as professionals, we were debating whether there can be a service tax as well as VAT on the same transaction. But now the challenges have gone one step further. We are now debating whether there can be excise and service tax on the same transaction. In the capital goods sector, many companies have faced litigation because installation charges of a machinery are treated as a part of excise duty. And in service tax, we have an entry which says installation service is liable for service tax. So on the same value, same recovery, there have been litigations wherein the assessee is called to pay both excise duty as well as service tax, and people have kept on fighting. So those matters are also in litigation at various forums. Travel and tourism, so AC buses now is brought into the service tax. So intercity, Volvos and all, that becomes liable for service tax at a rate of 40%. Yeah. 40% into 15%. So that will be 0.06%. Banking sector, mutual fund distributor is one point. Many of you might have agencies in the name of your family members, and you might be receiving commission on marketing of mutual funds or schemes and all those things. If you receive such commission, then mutual fund commission till now was on reverse charge, so the mutual fund himself used to take care of the service tax. Now, on the mutual fund brokerage which you receive, you will be liable to pay the service tax. Central excise duty. Two important sectors have been brought into the excise net. One is garments and jewelry. I don't think any of us are into those fields, so I'm not going into too much detail. But yes, this is one area where we may see a change or a rollback based on the protests. Earlier also they brought it and they were unable to implement it. Let's see what happens on that front. I don't think I'll take too much time into those two schemes. Yeah, next one. Infrastructure cess introduced on motor vehicles. For construction sector, there is an exemption which has been granted for RMC, which is manufactured at the site. Again, very specific to one sector, but again shows the inclination of the government. And this is a long story. Initially, there was an exemption for concrete mix, and all the RMC companies, all the construction companies felt that yes, the RMC which they manufacture is covered under the concrete mix entry and therefore exempted. One fine day, one officer says that look, there's a technical difference between concrete mix and a ready mix concrete. And what is the difference? End product is the same. concrete mix is a situation of what you see in the old Hindi movies, an old lady taking a bowl and mixing the cement and sand and putting water and mixing it. It's a manual process. And ready mix concrete is today you see all those RMC mixers on the road, which is there on a vehicle, and the centrifugal point keeps on rotating and it's automatically created within that. It's the same thing. End result is the same, but the process is one is technology driven, mechanical driven, whereas one is manual process. Matter went to Supreme Court that whether concrete mix, which is created through the mixers, is eligible for the exemption for concrete mix, which is given under the old excise act. Supreme Court said no. The manner in which you do the process might change the classification of your end product. Now this is very scary according to me. So it's like saying that you have an end product. If you make it through manual means, it will be classified under X entry. But if you do it through an automatic mean or through some machine, it will be Y entry. Maybe if your type of the machine changes, it can be Z entry. I think this leads to a lot of destabilization of the economy, but that's a Supreme Court decision. The government realized that this is not the correct way to do it, and therefore earlier what was exempted was only concrete mix. Now they also use the word RMC into that. So it helps to some extent. Excise, after so many years, for the first time they introduced the revised return facility. I think that's a very welcome step. Service tax already had it, excise didn't have it, so we introduced it. Monthly return, along with that, you are now have an additional annual return to be filed, which is somewhat on the similar lines like what we discussed in the service tax zone, to be filed by the 30th November. Perhaps they'll ask for all the details, and then there's a late filing fee if you file it late. Interest rate is again reduced to 15%, so again a good thing. The last one is an interesting amendment. As of today, whenever you claim Senmet credit, you have to have the original copy of the duplicate for transporter invoice, and it has to have a pre-authentication and an attestation. And when excise audit happens, those of you who are into excise audit would know that the superintendents try to find n number of excuses and say no, इसके ऊपर साइन बराबर नहीं है, इसके ऊपर रबर स्टैम्प नहीं है, इसके ऊपर सीरियल नंबर नहीं है, ये कलर बराबर नहीं है. Those types of small irritants were there. And then of course you needed to have an original. Xerox was never accepted as a duty-paying document. This time we have said that for a Senmet credit, a digitally signed invoice, which is a duplicate copy of transporter copy, will be acceptable for credit. Please note, it is not electronic invoice, it is a digitally signed invoice, which means it has to have a digital signature, which is there's a process. Today most of the companies are like, this is a computer generated invoice, no signature required. That will not work. You have to affix that manufacturer has to affix a digital signature to the invoice. If that is done, then yes, it will be a valid document for the purposes of your credit claim. So again, a welcome change, I think, on an overall basis. CST for gas transportation, there was a concern that if the gas is transported through a pipeline, what LR proof do I give? Because as you know, in CST, they always insist on an LR proof if you want to claim the benefit of the 2% tax. So here the concern was, what is my LR proof? Because I have a pipeline which is spanning across 2 states. I pump the gas in one pipeline from one state, it goes and it's withdrawn in the other state. So now we have an explanation which says that this will be treated as an interstate movement, and the benefit of the CST lower rate would be available against the C form. So that's an amendment which has been brought in, but this is the only amendment. We were actually expecting much more. This is a small disappointing note on which I would like to, sort of end my discussion. The last leg of my discussion is that yes, we were looking at a reduction in CST long ago, maybe 5 years ago they had committed a reduction. Nothing has happened, it has frozen itself at 2%. Also no other amendment in the CST law or no announcement on GST. And that is where some conflicting signals start coming in. Many times we talk about GST as a rampant illage to most of the problems which we face in indirect taxes. And we always, every day we watch the parliament with eagerness, and we always say 2 important reforms are being stuck up, right? The land reforms and the GST reforms. And both the groups keep on blaming each other. That's a situation aside, not going into that. But let me just ask you a question. How many of you are praying for GST to come. Yes, lot of you. Are we aware of what GST is? Yes. Anyone can maybe just one line input, 1 or 2 line input. Of what?
Consolidated tax which accumulates a lot of it. No, it will cover a lot of taxes in one.
It's a consolidated tax which will cover many indirect taxes. Yes, this is the original pipeline dream. And yes, we have seen this happen in many countries. And people have seen that yes, it has resulted in an improvement in the GDP. At some places, it has resulted in improvement of GDP by 2% as well. Only concern is in India, we are not looking at that GST. The GST model, which has been finally accepted for the Indian scenario, is a model which is known as a dual GST model. Now, how many of us are aware of this dual GST model? Yes, C and S GST. Quite a few of us. So essentially the question, we go to the next slide, next one. So essentially the question which we will be asking is that we would have a dual GST. We are not looking at a single tax. We are looking at 2 taxes. We will have a CGST. CGST will essentially replace your excise duty which you pay today, and to some extent will replace your service tax. So you will have a CGST spanning excise and service tax. And you will have an SGST which will replace your VAT. And because SGST will replace VAT at a state level, and you have so many states, you will have to address the situation of interstate transactions. Purchase in one state, sale in another state. Right? So you have a third word called IGST, which is the integrated GST for interstate transactions, which will in a way replace your CST. So what is changed?
It will be charged, right? So
Yeah.
there is no change. If
Yeah,
it
but
is charged,
will it be
then there is no
payable?
change.
Yes, that's an important change. All taxes we say will be VATable, and that according to me is a big change. It's a big mindset change, but yes, because of the dual levy, the administration at the ground level and the level of compliance, we say it will be VATable, it will be available as a credit, but availability of credit is dependent on invoice number level matching of your transaction with the other person's transaction. And the time window for implementing this entire thing and uploading of information is very restricted. So as an industry person, you will need to have a very strong system in your place where you will be able to upload returns, and the business process reports which the government has come out with, they have said we will not allow you any revising of any returns here. And the time limit available is very narrow. So your first sales register has to be uploaded by the 10th of the next month with extreme detail including HSN classification. Same thing applies to your purchase return, which has to be uploaded by 15th. So by 15th the government will have details of all the purchases and sales invoice number level. The supercomputer will match it real time, and on your portal, like you have your TDS mismatch, you will have a section on your portal where you can click and see what are your mismatches. On 15th evening, you will be given 2-day window to rectify those mistakes. 15th to 17th. And then by 21st you have to pay the tax. So these are the types of compliances which we are looking at, and this is what perhaps whenever it comes, it will be a little bit of a complication to actually handle this entire process. So yes, GST, this is dual GST, all of us are aware of, so I'm not going into too much detail of it. Next one, how is it spanning out on an overall?
What is OBD?
Yeah, OBD is an interesting, good that question came up. When the bill was second time, this is the second time the bill has been presented. Initially the UPA had presented the bill, which got lapsed. When the second bill was presented, it was the same old bill with 2 important changes. And one of them was this 1% origin-based tax. They said that if there is an interstate movement of goods, there will be a 1% tax for the originating state. And this was one thing which was opposed tooth and nail by the UPA. And ultimately, there was a select committee which was set, and the government, BJP government, has actually agreed on scrapping this. Though it has not been officially out, But they have said that yes, we are ready to concede this demand, and there will not be this 1% extra levy going to the states for the period of 2 years which was being proposed. They are ready to scrap this off. So it's really a little bit academic, but yes, it's there as a hanging sword to some extent. Yeah. So what is the way forward on GST? As of now, if you actually look at the legal side of it, there's a long process. You first have to get the GST constitutional amendment done. Because it's a constitutional amendment, the parliament at the center has to pass it, which has 3 phases to it: the Lok Sabha passing it, the Rajya Sabha passing it, and then the president accepting it. Lok Sabha has already passed it, the matter is right now in the Rajya Sabha. Whenever that gets passed, thereafter the president will accept it. That is not the end of it. That is just the starting point. This is when your seed is germinated. Thereafter, there is a long process till the time the tree gets grown. And those process basically means that the states will have to ratify, at least 50% states will have to ratify the GST bill, the GST constitutional amendment. Thereafter, there will be a GST law. Like today we have an excise act, we have a service tax law. That law is still not out. That will then have to be accepted by the central government and by the state governments. And thereafter, the effective date will be notified. So it's a long journey. Maybe we can see it in April 17, maybe we may not see it, we don't know. But yes, April 17 is the next date. Earlier we have been seeing postponement of dates all the way from April 2010. We've reached April 2016 where it appeared reasonably close, but we don't know. In a way it's fairly close, because if you look at, this is of course the legal side of it, and which looks very worrying. But on the other side of it, there's a lot of action which is happening. There's a GST network company, it's already set up. It has done a detailed systems study. They have created the network and the systems broad parameters for it. The software for it is being developed by Infosys, which is already in the process. And there's a lot of implementation training which goes on to the accounting companies like Tallies and the ERPs and the SAPs of the world. There's a lot of training which is happening right now. 4 business process reports are already there in the public domain. Those who are interested should look at it to understand what type of law we are going to bring in GST. That will be important, because at some time you might need to feel a need to make a representation or even adapt yourself to those changes. So there are 4 business process reports which are already there. There's a draft GST law. I would recommend you to read that once, because especially most of you are from a manufacturing background, you will find that there's a total change in the way the taxes will be discharged for the manufacturers. Especially today, you pay excise duty and a sales tax at the time of removal or delivery. Now that is changing. Even advances under the GST law would become a subject matter of taxation. So now that can complicate things, especially if in your business you have some ad hoc advances coming, and if they are coming from multiple states, it can have some impact on you. So I think those type of studying, sometimes depending on the time availability, at least you should know what are the likely issues which can creep up in that aspect. Of course, it's there in the Rajya Sabha. We'll have to see in this month how it goes and whether they are able to clear the Rajya Sabha hurdle. If they clear the Rajya Sabha hurdle, maybe yes, they can really open up and speed up the entire process. But if not, then there is a problem. We might see it coming up in the second term of this budget, of this government, assuming they are able to have a second term. So till that time, I think that's what we have for you. If there are questions, we'll take them up. Any questions from any of you?
On SPC,
Yes.
since it came in November last year,
Yeah.
have bodies like chartered accountants, etc., taken up all this saving of credit to the government?
Yes, we have talked about it a lot. In fact, sometime in start of February, the Minister of External Affairs, Sushma Swaraj, was visiting Mumbai, and she held a lot of back-to-back meetings with various bodies. The chartered accountants bodies were also a part of it. I was personally representing that forum, and this issue has been raised. But as I told you, some of the issues have come up in the amendments, some of them have not. Unluckily, this has not.
We have book payments of education cess and higher secondary education cess in our books.
Yes.
What can we do about it?
That's a painful proposition. The balance which stays there, there's no mechanism to adjust it against excise duty or service tax, and therefore it will have to continue. It does not lapse. At some point of time, let's say there is an excise audit happening 2-3 years down the line, and at that time some old liability is created. At that time, you may perhaps be in a position to use this. In that time, it will just stay frozen as a non-moving asset, unless your auditor forces you to write it off. Yeah, last one.
Yeah, had it been finally decided that the excise department will handle GST?
They have to.
They are the final.
Yeah, no, it's not only excise department. It's the state VAT department also who will handle GST. It's a dual levy means it's a dual administration. There's a dual filing of returns. Everything is dual. Registration is dual. So your excise department will handle the central GST part of it. The VAT department will handle the state GST part of it.
What is that right now, whatever is going on, VAT and excise, what's the difference there?
The basic difference for you as a forum, as manufacturers, is the fundamental reduction in the rate. Today you are paying effectively 28 to 29%.
Simultaneously, you just told that they are charging means the deadlines of 15 and 17
Yes.
and all that. All that
It's
pressures
painful.
are-
It's painful.
It's painful.
It's really painful. But 28 to 18 is a fundamental reduction. See, initially they were talking about a revenue neutral rate of 27%. And the finance minister clearly said this is not acceptable. They then set up a committee to look into it. And now the indications are it will be between 16 to 18. Assuming it is 18, then that is putting together both VAT and excise. It's still fundamentally beautiful for a manufacturer.
How many
So the
years?
GST is intervatable.
Yeah.
So one GST will be vatable in another.
No, so they have given 3 rules of priority. So first rule of priority is you use the same color. So I against I, C against C, S against S. Thereafter they have set the priority in a fashion that I will get adjusted against C and S. C will get adjusted against I and C, and S will get adjusted against I and S. They are still not permitting C against S, S against C. So VAT against excise, no. Excise against VAT, no.
No.
But still fairly liberal, I would believe so.
But what
Yes.
will be the rate of C and S?
So it will be half-half.
Half-half.
So if we are looking at 18, it's still not finalized, we are looking at 16 to 18. I'm just talking of the highest rate.
Yeah.
If it comes to 18, it will be 9-9.
Okay.
If it's 16, then it will become 8-8.
The typical signature will be of authorized person or it will be of the manager?
Authorized signature, authorized person.
Means we'll have to get it everybody's signature.
Yes, you'll have to get it added into your excise registration. Yeah, there was some question from
There is a dispute resolution for income tax, dispute resolution for excise, dispute resolution for service tax. Nothing about VAT or GST or anything.
Sir, they don't have the powers, no?
I
It has to be by the state governments.
Can it be there for similar, so what dispute etc. available for a benefit?
It's for the state governments to take it up. No? The central government can't decide that. Because VAT is administered by the state authorities. They will have to decide whether they want to provide some amnesty or a resolution mechanism. Yes, the last one.
When we import EP, CVD and SCD.
Yes.
Now, what about GST?
So in GST, instead of CVD and SAD, there will be an IGST. And that IGST will be immediately available as credit to you. So in that sense, it's going to be simplified. You don't have two duties and loading of each other and all that complicated formula goes away. Instead of that, you just have an IGST, straight away claim the adjustment for it. Only dim side is, especially if you are into that zone, you will, most of the licenses which people are using today at the time of import are likely to be scrapped.
Sir,
So you may not be able to import duty free. That may go away.
sir, when audit will happen, both the departments will do separate audit or it will
Separate
be-
audits.
Both the-
Separate audits, separate assessment, separate appeal mechanisms. Nothing is common. Nothing is common. So it's just, in that sense, then that is the concern and more important. Initially, when GST was proposed, and I have been a part of the working group, so I've seen it span over the last 6-7 years. It was expected to be an extremely simplified version which is there in the international scenario. But today, we are having dual GST. There is also, initially they might have a common rate like 18%. But the flexibility to the states exists to change the rate.
There is a flexibility.
Yes.
So then it will be the same.
So what will happen like VAT? When you had VAT in 2005, all the states had 12.5 as a single rate. But today you have disconvergence in rates. Today you have 12.5 in Maharashtra. Same product in Gujarat is 15. Same product in Karnataka is 13.5. So that is immediately when GST comes, everyone will sit on the board and have a common rate. Then you will need just one Jayalalitha or one Narendra Modi to change the rate. Yeah, there was some question from the back. C-form goes away. No forms. One important principle of GST is no entry check post, no document, no waybill, no C-forms, no F-forms. But they have found a very easy answer to avoid these forms. What are these forms meant for? They give you concession, right? They remove the concession. So, no C-form, but you charge full IGST of 18%. There will not be any 2% tax. Branch transfers will be fully taxed at 18% if you have multiple branches in different states. So no F form, no H form. You charge 18% to the exporter. Exporter will claim a refund, which is there even today as an option to you, right?
And all those entry forms and
All of them will go away. No, everything is technology driven. Everything will be through a technology.
But is it sure like everywhere the octroi has gone now in
Yes.
Mumbai it will go or it depends on the BMC only? Or
No, BMC has raised a small dissent. BMC has raised a small dissent saying that octroi is an important levy, we cannot merge it. But the center is very strong on this, and 99% octroi will be subsumed. 99% chances are there that octroi will go. It will be a part of this GST process.
How about small scale units which are exempted?
How about?
Small businesses.
Yeah, so
exemption.
small scale exemption, they are trying to, that's one area which they are trying to converge. And as of today, VAT has a limit of 10 lakhs. Excise has a limit of 1.5 crores. They are trying to find a midway. Central government had proposed that we will keep a limit of 1 crore. A common limit of 1 crore for both state GST as well as central GST. States have not budged. States have, as of now, agreed on 25 lakhs. Now that's a complication because if you say, you can't have a situation where excise is exempted but VAT is not exempted, because both of them have to go hand in hand. Right? So though they are two different wheels, they are two different wheels of the same car. So you can't have one wheel not working and another wheel working. Then your car can't, how will it function? We don't know.
Means each and every company has to take both the numbers first. Then only a
Yes,
company can start.
including service providers. So a person like me, who's today only into the service tax net, blissfully away from the VAT authority except representing clients, I will also have to charge both the taxes, CGST and SGST. I will have to go to the state governments and register. Now if I have branches in 10 cities, I need 10 VAT registrations in each of the cities and pay taxes. Now, as an industry, for you, fine, service provider will charge. What is important for you is, because 18% is such big a cost, you will have to monitor it well and capture and claim the credits. So you will have an insurance company who is charging you service tax today. He will then charge two components of GST. You will have to make sure that your TIN number is available with the insurance company. And you capture that information and claim it in your credits. As of today, insurance company doesn't care about your number. And telephone companies care the least. But moving forward, if your telephone bills are big, you want to claim the credit, right? So you have to give your TIN number to them, like you do for your raw material and your manufacturers and your traders.
MRP abatement will be there for all?
No, MRP, there was when the draft law was presented, there was a lot of talk about MRP based taxation into that. And thereafter we had also done a little bit of analysis and we had represented a lot about it. Ultimately the figure which is coming is that the MRP based taxation will go away.
Okay.
Because it has its own challenges. The whole idea of MRP based taxation was to capture the last leg. Now when GST enables you to reach the last leg in any ways, you don't need MRP. Like VAT doesn't need an MRP because every transaction is taxable. So ultimately MRP gets taxed. Excise needed MRP because only manufacturer was taxable. Everybody else, distributor, dealer, traders were not taxable, therefore you needed MRP. Otherwise there's no need for any MRP.
Okay.
So the thought process is it will go away. Yeah, I think that's the last question. Thank you very much.
Thank you.